Hello, everyone. This is Justin Smythe from nextbigtrade.com. This is your weekly sector review for January 19th, 2024. Starting off with BOTS, the artificial intelligence ETF, you can see that we now have a 5-week consolidation sideways, essentially, where, at the end of December or at the middle of December, we started losing momentum in this sector. Some stocks actually started failing. Other breakouts really just stalled and came back around to the breakout area. This is where the market started getting into trouble with the leading sector starting to falter. And then we consolidate sideways for multiple weeks. And, now the big news event of this week is the big semiconductor breakout. So really heading into next week, the logical thing to happen here is the artificial intelligence stocks follow through and break out. That would be the bullish narrative for the market. So they're basically in position to do that here. They're consolidating around the 10-week moving average. They've went sideways for a few weeks, and they should be breaking out off of the NVIDIA and SMCI news. If they don't, that's a negative sign, and that's a market that's still very hostile. So really, that's really the scenario heading into next week. Is we should start seeing more breakouts here. The SMCI news occurred right at the end of the week, so perhaps there wasn't enough time for the market to react to it and push these stocks higher. But that's what I would expect to happen heading into next week if the institutions are really going to continue to be behind this rally. So that's the setup. If we turn to the semiconductors, obviously we see the breakout here, up 8% for the week, breaking out of this consolidation. Volume did increase on the sector ETF, and it was only a 4-day week, so we would have seen even bigger volume here. So that's a good sign. So really, this chart looks pretty good, confirming the breakout. The other sector that is in position to follow through higher is the home builders, where they had a monster rally coming out of the October lows. They consolidate sideways for 5 weeks or so. Volume tapers off to the downside, and now they're ready to break out again. So this sector looks really good and is not surprising because it's a leading sector. You can see the relative strength is still outperforming the S&P 500 as well. So really, these are the two sectors to focus on heading into next week: is artificial intelligence and home builders. If we see breakouts in both of these sectors, then this rally is resuming, and vice versa, nothing happening, that's a negative sign for the market. US dollar is another important component of this market, where we're getting this important retest of the 30-week moving average. If the US dollar does break above it, that's the negative scenario. That means that stocks are probably being sold off. Things are getting defensive. Otherwise, we get the retest here, we roll over. That's bullish for stocks. That's bullish for precious metals and probably cryptocurrencies as well. So that's really the setup here. This is very important to watch heading into next week. Precious metals, not acting well. Gold is still holding above the 10-week moving average, holding above critical, support levels. So gold looks okay still, like nothing really bullish happening, but nothing super bearish either. Silver, on the other hand, is now back towards the low end of its trading range. If it breaks down here, obviously that's bearish. Relative strength looks terrible against the S&P 500, so it needs to bounce here. That's what should occur if this is still a bullish setup. Mining stocks sold off on heavy volume this week, So, and that most of that occurred during the beginning of the week. So when the market was getting defensive early in the week and the US dollar was still rallying, they sell the mining stocks. Then when things turned around at the end of the week, the mining stocks kind of just went sideways and did nothing, and the semiconductors started ripping. So maybe if the bullish scenario is occurring here for the metals and the dollar's rolling over, then maybe we've put in a little bit of a bottom here, but ultimately we can't break down below the support level. So the miners are really set up like silver, where they're at support, it's do or die time to rally, or we're back in a stage 4 downtrend. Same thing with silver stocks. Terrible performance this week, and a lot of it was early in the week with the initial move lower. Notice how the volume was lighter this week, though. That's typically bullish on a declining market. So again, it's do or die time for the metals, and a lot of that's going to be impacted by the US dollar. Finally, bonds are critically important too here. You've got a retest of the 30-week moving average. You've got heavy volume to the downside. And you've got, previous, it basically breaks through the only remaining support back during the downtrend. Massive volume comes in. It rallies back up to resistance. So this is a logical place to pull back. Now we're back at the moving averages. So really it needs to bounce here. Otherwise, it might start moving back into stage 1, but the bear case is just a knife through and we're going down. And that would be very bearish for the market. Obviously, the market responded very negatively to rising interest rates back in the early fall of 2023. And the same thing would probably happen this time. So bonds are interesting to watch here. You want to see kind of a slowdown to the correction and kind of a firming up, which would be bullish for the market. So overall, the US dollar and bonds are at critical junctures. Semiconductors followed through on volume this week. That's bullish. If the artificial intelligence and home builders join next week, I think the bull case is firmly in control. And vice versa, if it doesn't show up, then things were just basically fake moving higher, and then we're going to roll over. So watch the artificial intelligence and home builders next week and see how they act with the market firming up this week.